Hello and welcome to the Humble Investor Bull Bear Market Report. My name is Adam Straseske, and this is for the week of April 16th, 2018. Some important disclosures. Whoops. And finally our agenda. So we're going to go over the broad market readings, and then we're going to get into the operating plan for this week. So first things first, are we in bull or bear market territory? Are we on a risk on or risk off stance? We're in a risk-on stance simply because the S&P 500 and the MSCI All-World ex-USA Index are outpacing Treasuries on a 12-month rolling basis. So it looks good for both of them right now. S&P 500 is just a little bit stronger than the MSCI All-World ex-USA Index, and that's why we're focusing on new things with inside of the USA. As far as correction risk this coming week, market action, the way these oscillators work is they work best when they're in line with the trend. For example, the trend is up right here, and the oversold indication works best. Overbought didn't work too well. Overbought here, price really didn't go down. Overbought here, just a little blip as far as price going down, and then it continued up. However, markets changed. Now we're in this sideways market, and we got overbought, a little bit of a sell-off, overbought, and another sell-off. Right now, we're overbought again. So don't know if this will trigger. The market will sell off this week, but we are in an overbought territory in a sideways trending market, and so we'll see if we can get another push to the upside before we see any downside action this week. As far as the stage of the S&P 500, we're still on this broad bull channel or a trading range. Could be either one. Looks good for the bulls this past week. We had a buy signal, and we'll see if we can get a trigger. So that's what the bulls want to see. The bulls want to see a trigger, and we'll see if we get it. Ultimately, really what we'd like to see as far as being bullish on the market is it hold above this channel line. And if it does break below the channel line, it doesn't necessarily mean it's the end of the world, but it will definitely show strength to the bears here. Our operating plan still like preferreds, U.S. large caps, U.S. growth, and then here is a list of our weekly swings. We did get involved in global natural resources this past week, and I don't have a chart for that, but we got in and just a nice little swing down, and it looks like it started to come back up again. U.S. large cap and U.S. large growth, here's a picture of it right here. You can see the trading range we've got in the channel. Both look very similar to the S&P 500. We've got a buy signal right here. A trigger will be trading above this past week's bar. Oil up over 8.5% for the week. We've got a stop right in here in the 54 range. If we do, in fact, get some follow-through, additional follow-through to the upside this week, we'll adjust the stop up a little bit. Looks good for oil, well within this tight channel, and well above the breakout point. So really like oil right here. U.S. Treasuries, don't like it so much as far as the strength of it goes. We're sitting right on support, and if in fact it does break support to the downside, then we will exit. But like I've said before, the vehicle that we actually trade is within this trading range, and so it looks a little bit stronger than this, but frankly, not much. So it doesn't look really good for Treasuries. Wanted to see really just a strong move to the upside within the channel, and we never got it. Australia up almost 2% for the week. We had a measured move right here in the 21.5 area. Didn't quite get down to it before we got the buy trigger. If it does in fact continue to the downside, then we will have a second purchase range in here, an initial stop down in here. But right now it doesn't look bad for Australia. Really didn't like that it came back into this trading range. Would have been better if it could have held above, but we'll take it for what it is, and see if we can get some continued action to the upside. Brazil down 2.53% for the week. We're sitting right on support and right on the channel line, and we really need some bullish action this week for this thing to continue to look positive. If it does come to the downside, then we've got a second purchase range down in here in the looks like 32, 35 price range. And we should see some support down there too. And the EAFE looks good, up 1.69% for the week. EAFE value, that is. We had a bull breakout. So a few weeks ago, about 3 weeks ago, we had a buy signal. And here's our trigger bar the week before last. And then last week we had some nice follow through. And so we'll see if the bulls can continue. If they can't and it turns down, we've got a second purchase range in here, an initial stop just right above 50. Don't have any new additions this week for the monthly trend or the weekly swing. Markets look okay right now. It's pretty easy to see both a bullish and a bearish case. And so we're going to continue to hold the positions that we've got, look for our second purchase ranges, and see if we get stopped out of anything on the upside or the downside. So have a great week, and we'll talk to you next time.